Okay, so this is the answer for part D2G. Any questions with this? Did you get everything correct? All right, wonderful. Then question number 5, right? We'll do it together, right? Now, this is how we are going to do. Now, have a look what we have to do this. Firstly, we need to calculate the capital, right? Now, what have you been given? The balance sheet as of 31st March 25. Okay. And then in the first week of April, that means immediately after, so 31st March will become the items as of 1st of April. Why? Because if you close your shop or your business on 31st night, right? The next day morning when you open up the business, you'll have the same items just as it is, unless you are robbed. Yeah. Then you'll have everything, right? So there is basically what? 1 second difference, yes? 11:59 p.m. On 31st March. So next moment, it will be 1st of April, right? First week of April 25, the following transactions occurred, right? And then 6 transactions have been given. Now, what should we do? Firstly, part A. Calculate capital as at 31st March. Why do they ask us to calculate capital? Because capital is a question mark, yes? Right. Shall we start with capital? Yeah. Okay. So I would say 0, 0, 300, 9 plus 2, 11, 11 plus 6 is 17, 1 remaining, 6 plus 1 is 7. Okay. I didn't ask you to do this one, did I? No. Okay. Then that's done. Now after that, have a look at part B. That's a theory question, don't note it right now. Okay. Right. Part C. I mean, if you want, you can read it. Right? Explain why the computer on 6th April must not be valued at 4600. Okay. Right. So it's his personal computer. Yes, personal. Yes, because he purchased it at. See, Peter contributed his computer that he had purchased 4600, but right now it is 4000. So leverage accounting at least. Yes. What value would we record? Do you know? Most recent value, which is 4000. Why? Because it's the value. Yes. Actually, rather than depreciation, it is the value. So depreciation has happened to the owner. Right? Owner purchase. So depreciation occurred for $600. So 600 is the depreciation for the owner. But for the business, its original cost is how much? 4,000. Okay. So then you don't have to worry about it. Okay. Then, Tinura, the other thing is this. Part C. Prepare a table to show the effect of each transaction on the balance sheet. Okay. The same thing that we did in the previous question, or this one. Okay. So we have to do that one. And have a look at the last one. Prepare the classified balance sheet for him as of 6th April. Okay. Right. Then what I'm asking you to do is, now there is a strategy that I practice in the class with my student. The same thing that I did in my VCE. right? When I was at your level. Right. So that is, if you did this one at school, your teacher will ask you to do part C and D separately. Okay. So that's what most of the schools do. Okay. But I'm asking you to do it together. That's a smarter thing to do. Right? Wiser thing to do. Why? Because if you are, so my point is, and you don't have to really worry about it now, and if you are unable to do it together, that's all right at this point because we just started it fun. I don't really expect that kind of, uh, level right now. But definitely, when we go halfway through this year, right, you should be able to do it. So then, from the beginning, we'll do it. The point is, why do you think that we should do it together? So you could like think about others while doing this. Actually, you know what? You know the reason? To save time. Otherwise, you know what happens? We'll have to read the question. This one two times. So I'll show you a method how to do it together. Okay, and this is exactly what we are going to do up until you finish your UC. Same thing that I'm doing with my 3-4 students, right? So you will see. You will clearly see the difference. So I know that because I have done in my VC, then we'll save time. Okay, uh, so we'll do that. Okay, right. Now we'll start from the April 1st. Right. What is happening to pay 3,000 to accounts payable? What happens? Okay, so what I would do is I'll put minus 3,000 for accounts payable. Then what else? Your like equities with the decreases. Equity, the capital decreases. Would it decrease 3,000 both sides? Yes, 3,000 decrease accounts payable for sure. What's the other? Is decreasing. No. So you paid the accounts payable. So let's say you had owed money to your friend. Now you paid it today. What happens to you? So your accounts payable. Your money also decreases. So we go to the bank. Minus 3,000. Got the point? Right. Now what do we do? No. Equity doesn't change. Okay. Did you mean equity, the capital? No. Total equity. Okay, that's correct. Total assets will decrease. Equity is also decrease. But now we are not going to do it. Why? We have more thing to do. We have more transactions, right? We are not going to do a balance sheet at the end of each transaction, which we can do, but we are not going to do because why? We have been asked to do it as of 6th of April, like after this one. Yeah. Okay. Then what's the next step? No, before that. Now what are we doing? We are doing part C and D together, right? Now we did the requirement for part D. Now what do you do? You have to do part C. I do the table. Okay, shall we go to the table? Now take down bank. So you have to put the date, April 1st.
take down Part B as well.
Come again?
I take down Part B as well, like the answer for Part B.
Yeah, part B we'll do later. Firstly, this part.
Yeah, I think that.
Done? Good. Okay. Now, now we can look at second one, April 2. Borrowed. Now you're ready.
That would be bank.
Bank.
So your bank would decrease.
Your bank decreases, yes.
Um,
How much?
28,000.
28,000.
So you can't repay the loan, starts in May. And then you also buy another van. So the delivery van would increase by 28,000.
Okay, so you are saying bank decreases.
Yeah.
Yeah. Then delivery van increases because you purchase. Anything else? How did we purchase the van?
With the money from the bank.
From the bank? Yeah. Uh, so uh, money from the bank, our bank account, or from the loan, from the loan?
If you borrow like $28,000 cash from a man, will you be a loan?
Yes, it will be a loan. Yeah? So what will happen? You take a loan. You take a loan means what happens? Your
Accounts payable.
Yeah, your loan, not accounts payable. Your loan increases. Okay, not accounts payable. What do you mean by accounts payable? Accounts payable is, let's say you have a shop, you purchase its materials or inventory from your suppliers on credit.
Yep.
Okay, but if you get money on a loan, it's just a bank loan. Okay, not accounts payable. Okay, so your bank loan liability, what happens? Increase. Anything else happening?
Your bank loan increases. And then but what is your inventory fix?
Inventory is when you, let's say, you have grocery, okay, and you had to purchase groceries, yes, that's your inventory. Let's say you have a car sale. What is your inventory? Cars, right? You have furniture shop, furniture. Okay. Yeah.
Oh, so if you would fetch another van and like you use the van, that'd be a.
No, van is not an inventory unless you are selling vans. So then, what is it? This one? Okay. Van is at this point, what is it? Non-current asset. Inventory is a current asset. Why? Because you are meant to sell it within the next 12 months. You don't have to keep it for a long time. So you are going to sell it. So I'll help you. I just wanted to you to think about it. Okay, so what happens is, you go to the bank, you get a bank loan, your loan liability increases, your cash at bank
Decrease. No, increase.
increase.
Cause you get the.
You get the loan. Okay. Next moment, what do? With this, with that money you received on the loan, are you basically give away to the van supplier, van seller, and get the van? What happens? Your cash at bank, in 1 minute it increases, next minute it decreases. That means if you want, we can say like this. So basically, you can say plus 28,000, and next moment minus 28,000. So plus and minus, what happens? Zero, you cancel it out. So that means you don't have to worry about the bank. So rather, what would I say? Our van increases, yes. Our van increases by 28,000 plus 28,000. On the other hand, your loan
Uh,
loan decrease, loan also increase. Now there's a problem with the loan. Okay, now have a look. I'll say plus 28K loan. Now see the loan. Now this is up to which we did. The rest, the loan is to be repaid in monthly installments of thousands. Okay, what does that mean? Commencing in May 25. Yeah, commencing in May 25. So how much? So now what is our, why do they say that? Why do they want us to tell us?
Because it should be, part of the April month, since it's.
Yes, we are doing the balance sheet as of, that is, doing it as at April 6th, 25. Okay, all right, keep going.
You can't put it like, since you're starting to pay it in May,
Yeah, next month
you can't put it in the April one because it hasn't happened yet.
hasn't happened yet. Okay. Anything else that they are going to, that the examiner is going to indicate us with this statement from here?
If it's monthly installments of $1,000, it'll take 28 months, so it's a non-current liability.
Very good. That's the indication. What's the indication? That 28K we have to subdivide into current and non-current. So how do we do that? How much is the current portion? How much is the non-current? So I'll write here current liability, non-current liability for loan.
You do 7,000,
7,000,
because May, June. 8,000,
8,000. How did you get 8,000?
because it starts in May.
It starts in May and finishing?
Oh, no, it goes to May again.
Very good. So our balance sheet, have a look. Our balance sheet is, we are preparing as of April 6, 25th. Then we are going to, so that the 12 months, because the current, non-current thing is for the next 12 months. Then you are adding 12 months here. So when you add 12 months here, it will be April 6th, or you can say even 5, that's fine. 26th. That means up until the April 6, 26. How many payments do you think will happen for this loan? Would there be 12 or lower?
If you, would payments start at 825, that would be 11, because you can't.
11, very good. That's one. So it is 11, right? So it is 11. The reason is, and also they are saying in May. In May, we don't know when. Probably we can assume because they took the loan on the 2nd of April. After a month, hopefully they are starting from 2nd of May.
No matter what day.
Doesn't matter whether it is May 1st or May 31st, doesn't matter. Right? That's why the examiner is saying clearly it is starting in May, it doesn't really matter. So we will have only 11 payments. Meaning, how much is the current liability of the loan? 11,000. I'll write here 11K, and the rest is 17K. Yeah. What was
The money.
which one? Yeah, you can write anywhere because this is we are doing working. Because imagine this is the question paper, we are doing the workings on the question paper.
Ironic, you know.
Well, anyway, as long as it makes sense to you.
For the next one, would you so your accounts receivable was going up by 2,400, and then since you're receiving money, does that mean you're
So you are telling for part C, yes? Yeah, part C, but how do we write it?
so your accounts receivable is
Yeah, so hold on. So what will I'm sorry. Before that, we have to do it for the second one. Sorry, which one? April 2nd. Okay?
okay.
Yeah, so part C, what is happening? Your van is increasing. What is the other item affected?
Your
Loan, yes.
you oh yeah.
Right. Then, right, we'll do part April 3rd. Right. Receive 2,400 from the accounts receivable. So what happens?
Your accounts receivable
Will
decrease.
increase,
Decrease.
decrease. Yes, meaning your friend owed you 8,000 and he pays you some amount from that. So then how much you are going to receive from him in the future will decrease, which we call as account receivable. So we have say minus 2,400. And then what's the other item? The other item is what are you receiving?
Oh, you receive money.
You receive money, yeah. So your money increases. Yep. Okay. Then what's the impact on the accounting equation?
Your
Bank.
bank would increase because you're receiving money from your accounts receivable.
Yeah, and accounts receivable
Decreases.
decreases. Yeah, take down. Yep. Good. Then April 4th.
Uh, with- So even withdrawing from the bank, so your bank would decrease.
Mm.
Um,
Your bank decreases and then
with capital increase,
your capital increases as well. Your capital increase or decrease?
since you're withdrawing it for your own purposes,
Mm.
would it increase?
No, when you withdraw me, when the owner withdraw means what happens? Yeah. So then yeah. So his claims on the assets will decrease.
Yeah,
Right?
because you're separate from the business, so nothing like that.
Yeah. Correct. So then your inventory is decreasing because his business is spent. He withdraws some payments, 1,500.
Maybe your bank.
No, it's not banned. Why? See, Pete withdrew.
Oh, with a pay.
Yeah, pain. Pain means the inventory.
Then would your capital decrease?
Your capital decrease, yes, so you are correct. So then, but that one we call a special thing. I think I told you last week, yes? We say that drawings. Did I? No, I didn't explain you. Drawing. Drawings means what the owner withdraws from the business. Yep. If the owner withdraws, didn't I tell it to you last week? I have a slight memory. Maybe then it was for it was for the other class then. Yeah, for the granular class maybe. Right. Okay. 1,500. He withdrew it for his own purposes in the sense. The owner can the owner withdraw business items for his personal use?
He can. Bro.
He can. Yeah, nobody can stop it. Yeah, not even the goat can stop it. But what we have to do is we have to record. Yeah, we have to record it from the on the thing. Right.
So it would decrease.
It
Wait,
yes.
I got one more.
Yeah, go ahead. So that item, so whenever the owner withdraws business items, we call a special term, right? That's called drawings. Did I tell you about this one, drawings? Yeah, so no. So drawings is when the owner withdraws business assets for personal use. There is a special term called drawings. Drawings, in this case, the more money or assets inventory when the owner withdraws, what happens is drawings increase. In this case also, drawings increase by 1,500. But, right? But, so I'll say drawings plus 1,500. But this one, by default, this is a negative thing on the capital. It's a negative impact on the capital. So we call drawings as a negative capital or negative owner's equity. Okay. So then I'm going to show you, right, how we would record it in the thing. So at this point, just write it here, drawings, okay? Just put drawings and then 1500 and so on. This is how we would do. Please take down like this, inventory, asset decrease, okay? Right, then next one, paid the wages owing.
So
What will happen?
minus 2000.
Minus 2000 from wages owing, correct? What else?
You need to get the money from somewhere.
So minus 2000 from wages owing, then what else? Bank is, what is happening? Minus 2000, correct. Yep. Okay, then last one. Before that, we will say wages owing and bank decrease 2000 each. Right. The next one, Tinuru, is last one. Tell me what happens.
I don't put it sheet.
You don't put, sorry?
Um,
You sure you don't put it?
no, wait, you put it as an asset and you list it as it's like, most recent value, so 4,000.
4000 is
Would it go to, it wouldn't go to inventory, so like, would it be personal computer plus 4,000?
yep. Personal computer plus 4000, which is we'll say now we don't have a computer here, yes. Then for part B purposes, that is for balance sheet purpose, I'll write here computer, right? How much? 4000. What else is affected? Yeah, we will call, I'll help you here. We call that one as capital contribution. Right? Capital contribution plus 4000. Right. Now, what is the impact on the accounting equation because of the uh, personal computer being contributed?
Your assets will increase.
Assets compute increases and
Liabilities will increase.
liabilities? No. So this one is owner is doing something to the businesses. I have told you. Owner's equity will be increasing. Good. Correct. Take down the last one. Okay. Right. Then last one is then I'll show you what we are going to do with the balance sheet, right? Now this is how I would do the balance sheet. I'll show you. Right? Now look at this. This is what I'm doing. Now I will show you this time, but in the future you will have to follow me. Right? You will have to do by it yourself. Okay? Right. Now what we are going to do is we are going to follow now see our balance sheet as of 6th, which is the part D, is now halfway through done. It's a matter of copying down. Why? Because all the impacts we have updated in the balance sheet. Because we started with 31st March, right? And then over the week, 6 transactions occurred. Then we have updated in the balance sheet. Now we are going to prepare it. Let's start. Usually, you have to start with bank first in the current assets, right? So I'll start with bank first. Otherwise, you can start with accounts receivable. You can put bank later. Either way is fine. Okay, I'll start with bank first. So bank, what is happening, bank is, yeah, we have got 5,000 and minus 4,700 plus, which is 700 minus. Yep.
Yeah.
Yeah, bank is minus 700. Yes, what do you call it? Bank overdraft. So bank overdraft is a current liability. I'll start it here.
Also, when the bank goes to negatives, you put a.
Yes, it is a overdraft. No?
Right, for the bank, would be 2,300 minus 3,000 plus 2,400 minus 2,000.
Yes. So 700, yeah, minus.
Plus. Would it be 1,100?
Okay, this one minus, this one minus, yes. Minus 3,000 and minus 2,000 is minus 5,000.
5,000.
Then these are plus 2,400 and plus 2,300, which is 4,700. Ah, you are correct. It is not 700, 300, yes? Yeah?
No, because if you do it like step by step, it would be you first get 700,
Yeah.
then you plus 2,400, so that's 3.1k. Then you
No, not 3.1k. The reason is it is negative.
Oh,
So-
yes,
Yeah.
700.
Yeah.
And then you get 1.7.
Yeah.
And you minus 2,000 from that.
Yeah. So then actually it is not 700 days, 300 days. This is 300. Right. Bank order of 300. Okay, next one. We'll start with the accounts receivable. Becomes 5,600. Yep. So accounts receivable. $5,600. Next one.
Oh,
Yeah, you're correct. Delivery way. How much?
so it
Yeah.
would be 53.
53,000. Yes. Delivery way. Non-current asset.
Fixtures, fittings.
Yes, next one is fixtures and fittings.
I don't know where that's current or not current.
Non-current. Yeah. You know what fixtures and fittings is?
No.
Yeah, fixtures and fittings is like basically furniture and the things that we have fitted long time. Yes. So in this class, what have we fitted really? Probably we can say these lights, curtains, yeah, can say. The cameras, yeah, whichever we have fitted, maybe in a shop, maybe the racks, you know, those ones, the fitted one, fittings. Fixtures and fittings, how much? 18,000. Right, next one.
Inventory.
Inventory,
22,500.
22,500, which is a
Non-current.
current asset. That 400. And then computer.
Current.
How much? 4,000. Right. Okay. Right. Now assets are done. We are going to the liability section. Right. We start with accounts payable. How much? 6,000. 9 take away 3,006. Okay. Next one, capital. Before that, what happens to the wages owing? It will be 0. Why? Because this 2 minus 2,000 goes into plus 2,000, 0. Before capital, we have loan. Loan, what is the loan's NAB? Loan NAB, how much? Current liability? 11,000. So we figured it out. Loan NAB.
And then non-current.
Very good. Loan non-current, how much?
17,000.
Loan NAB, non-current. There we had only one non-current, so I'll write it straight away in the last column. Right. Next one is drawings, which is 15. No, before drawings, we had to write this one. Capital feet 66,300. 66,300. Then you are adding this capital contribution 4,000 plus sign capital contribution 4,000, and then we have drawings 1,500. So then now this is how you write minus sign. If you want, you can put brackets, right? Minus drawings. If you want, you can write less as well. In words, you can say less. So which is 1,500. Okay. Now, shall we start the working out from here? Right? 66,300 plus 4,000, 7,300, take away 1,500 is 68,800. All right. Then current liabilities I'm getting 17,300. Right? 17,300. So all the total equities I'm getting 0, 0. At 300. It's 15 plus 3. 2 remaining 103, 300. And then assets I'm getting current assets firstly 28,100, and non-current assets I'm getting 0,005, 675,000. I have made a mistake. 8 plus 3 is here, it is 1. This one should be 100. Right? And then I'm getting here 100, 8513, yeah, 103, 100 is balance into 103, 100. Yeah. Any questions with this? No? Okay, you want to start the next one? Question number 6. Right. Read it and then figure it out. Please take down the answer for part B.
So for the first one, it says pay 2,000 to an account payable.
Yep.
So accounts payable will decrease by 2,000 and then your bank overdraft will decrease by 2,000.
Yes, that's a good one. I will explain it to you. Right? Now, please cross this plus GST. Actually, 2 mistakes. Purchase inventory, cross this one. So that's on the 4th and on the 6th. So don't worry about GST, okay? Right. Then, now let's go ahead. Right. Paid 2,000 accounts payable. So paid 2,000 accounts payable means your accounts payable will decrease. But now there's a problem with the bank order. Why? Because when you pay 2,000, what happens to your bank order?
Bank overdraft, like, since your bank overdraft is like the money, like in the negatives.
Negative.
Increase.
Yes, negative increases. So that means we'll treat this one also as a negative value. Okay?
So you have to minus it.
Then from there, so all you are minus. So if you get money, it is plus. If you pay money, it's minus. Good. Yeah, from that, keep going.
Of the 6,000.
Yeah, so from the so first we will do this one. Sorry, Sam contributed 5,000. That means we are getting plus 5,000. And then his capital contribution is plus 5,000. Yep. Right. Shall we calculate the capital as well? Capital is 500. 13 plus 2, 15, 16, 7. Then then 37, 500. Right. Then 3,000 of the loan principal. So loan principal, Tinur, how much? Repay 6,000 per annum, yes? So if that is the case, what will happen to his loan?
His loan will decrease.
Decrease. Now, so what do you mean by repay 6,000 per annum?
Within the next 12 months.
Within the next 12 months?
Yes, to pay off 6,000.
6,000.
So
Yes.
6,000 per annum.
Yep.
6 years.
Sorry, it will be, sorry?
6 years.
Over 6 years, you are correct. So that means, so he's paying 3,000. So what will happen to his loan? It will be 33,000, yes? This loan 33, right? Loan 33,000. From this one, how much is current? How much is non-current?
6,000 be, because he's already paid off 3,000, so 3,000 would be current for this
Okay.
term.
Actually, Tinura, within the next year, would it be 3,000 repayable or 6,000?
Well, hasn't he already paid?
Yes, but still, you have to pay another 6,000 within next year.
Why?
Why? Because every time, right, the time frame is 12 months. They are saying 6,000 is per annum. Every time, right, regardless, so 6,000 should be paid within the next 12 months. So that means always the current liability will be 6,000. Yeah. Actually, non-current liability will be the remainder, which is 27,000.
Okay.
Okay. This one will be 6K, so it will be 27K. Right. And also, then you had to, because we paid 3,000 off, then you had to say here, well, how much? Minus, shall I put it here? Minus 3,000. Yes, you are basically losing them.
It would increase by 10,000.
Yeah, he's
Purchase it on credit, so it would be a liability.
liability. Which liability? No, not loan. I told you, like when we are purchasing inventory on credit, so it's a liability, but which liability? Bank? Is it a bank? No. So why it's on credit, yes? On credit means are we paying right now? No, we are paying later, yes. So meaning we are paying later as a result. Which current liability is affecting? I told you in the previous question.
Accounts payable.
Accounts payable is increasing. Yes, and you can say plus 10,000. Plus 10,000. And then the other one, which is inventory, what happens? Plus 10,000. Both plus 10,000. Good.
Two for those of use, which worth 2,500.
Yes.
His bridges would decrease by 2,500. Where he's taken some from the business, so his drawings, which is the way that owners equity,
Yeah.
would
Good. So, which is, drawings will increase 2,500, which is negative on equity. And then fridges, what will happen? So update this one in the fridge one in the balance sheet 2500, and we have drawings 2500, yes. And then what about the last one? Last one I'll help you. Paid 1320 in advance for the next 6 months.
So you're taking money out of bank.
Yes,
The bank.
bank decrease, very good. So I'll write here somewhere here minus 1320. Yeah. And then what is the other item affected?
So the rent would be a liability.
No, rent is not liability. Why? Because we have paid it. Especially when we have paid for the future, what will happen? What would it be? It's an asset. Why? Called prepaid rent. The reason is right. The reason is it's a future economic benefits that we are receiving. 1320. Okay. Right now, basically that's it. Yes.
Yeah.
So we have to prepare the balance sheet. Okay. Right now, shall we start from the beginning? Okay. So firstly, Tinora will figure out whether, I mean, if you are going to get
Either through this is the effect of the affecting.
yeah, affecting you have to do. If you want, you can do it at home. Yeah. Then do the balance sheet.
So I do the other for homework as well.
No, we'll do it now.
Okay.
Yeah, this is how the balance sheet would look like. And then, did you get it, balance?
Yeah.
Yeah, good. And this is the prepaid rent. Yeah, if you want, you can try it at home. Otherwise, you can take down this, whichever you. So this prepaid, expenses we are going to discuss in details only in Unit 4. Okay. So yeah, so we have a long way to go. About 1 year to start Unit 4. I'm finishing Unit 3 for this year, 3, 4, tomorrow.
Oh, okay.
Yeah.
Wait, so by next year, I should be able to do full.
Yes. Oh. So yes, so basically by next year, this time we are finishing actually in 3.
Okay.
I'm starting actually the SAC preparation. So, okay, Tanu, then please finish this part A at home. So that's going to be the homework. Then, thank you.